As a finance professional in a disrupted business landscape, what does it take to be in demand? What does it take to attract great paying international roles? If you're an ICAN member, it'll just take one exam. That's all it takes to complete the globally recognized SEMA professional qualification and the internationally respected CGMA designation. As a SEMA member and a CGMA designation holder, employers will look at you as a finance professional, constantly acquiring new skills to add value to the business. That's why they'll be willing to pay premium to hire and retain you. If you have 5 years of relevant experience and are an ICAN member, you can directly sit for the final exam of the SEMA Professional Qualification, the Strategic Case Study exam. Start studying the SEMA Professional Qualification. Prepare to make an impact.
Good evening, all our professional colleagues, friends of the Institute of Chartered Accountants of Nigeria, our students, ladies and gentlemen. We want to welcome you to another beautiful session of ICAN on Air today, Thursday, the 12th day of the month of January 2023. And like we promise you every Tuesday and Thursday, we will be coming with topical issue and facilitator that are vast and well knowledge able to enrich our knowledge base as professionals, students, and even non-accountants so that we can equip ourselves in the business environment. And on that note, our topic of consideration for today is the effect of Forex, that is foreign exchange shortages on businesses. Effect of foreign exchange shortages on businesses. And to do justice to this is no other person, a friend of the house who has been here and always willing to do justice to any topic that we give to him, is Mr. Ayodeji Ebo, FCCA. Currently the Managing Director and Chief Business Officer of Optimus by Afrivest, the digital platform powered by Afrivest West Africa Limited, and the Chief Group Business Development Officer for Afrivest. He has over 16 years of experience in business investment strategy and economic and investment research. He was the Managing Director of Afrivest Security Limited, a leading licensed broker-dealer and subsidiary of Afrivest West Africa for about 4 years prior to his appointment as MD. He led the investment research team and worked in the investment banking division. To his credit, he possessed a strong analytic, qualitative, and financial modeling and analytic competency, and has undergone extensive training in financial modeling and analysis, business strategy, financial market, and risk management within and outside the country. He is an authorized dealing clerk of the Nigerian Stock Exchange and also an associate member of the Chartered Institute of Stockbroker, a fellow of the Association of Chartered Certified Accountant UK, that's ACCA, as well as associate of the Chartered Institute of Security and Investment, CIS. He is a member of the Governing Council of the Chartered Institute of Stockbroker and has served on several committees of CIS and currently served on the program and annual conference of CIS. He was a member of the technical committee of the 19th Nigerian Economic Summit. That is our guest for today, Ayodeji Ebo, FCCA. And we'll be doing justice to the effect of Forex shortages on businesses. Like I used to tell you that this is the best platform to exhibit and promote your goods and services because we have our members and non-members that are connected both locally and from the diaspora, to patronize you at every point in time to promote your goods and services. So, on that note, I'll be going on a very short commercial break. And when I'll be coming in, I'll come in with our guest, where we'll be doing justice to the topic of today. Don't go anywhere because you and I know the importance of Forex to businesses, and we are here to learn more. Stay tuned. I'll be right back. Welcome back and good evening, Mr. Ayodeji Ebo, FCCA. Nice to have you on ICAN on Air this evening.
Yeah, good evening, sir, and it's a great pleasure to be here again.
Yeah, we are ready to move on a very fast pace and give our members the insight into the topic we have captured, the effect of foreign exchange, that's forex shortages on businesses. Let me start this way that some say Nigeria economy is suffering is due to foreign exchange shortages. Oh, just pardon me. There seems to be a little glitch. I proceed by saying that some even think the Nigerian economy is suffering, is due to foreign exchange shortages. With you on our show today, we want you to enrich our listeners that are globally connected on the ABCD of Forex. Simply saying, what is foreign exchange? How does it work or how does it operate?
Okay, thank you very much. So when we say Forex, one, we mean a foreign currency. And if you look at it, liken it to the situation in Nigeria, you have the Naira and you have other currencies. So any currency, when you are trying to deal in any currency that is outside your primary currency or your own currency, then the situation of Forex comes in. So it's like a transaction. It can either be based on transaction, conversion. There's always an activity that is involved. And there are a lot of implications that would have. So foreign exchange, so you are exchanging. So you see when you import, there's import from other nations. You need to also pay for those products. And by the time you also look at when you also export, you also earn foreign exchange. So the mix, so would say balance of trade, the difference between exports and imports. And most times when you have balance of trade that with surplus, it means that you're exporting more than you're importing. So, but basically it's has to just do primarily with dealing with other currencies. So, hello, can you hear me?
Hmm. Then how does it affect the economy of individual, corporate body, and as a nation?
Okay, yeah, so thanks. And I would like to start with from the individual. I'll look at it from two perspectives.
Okay.
For the individual, how will it impact you? So the way we would see FX would impact in terms of its fluctuation, so it can be positive or negative impact. So if there's an appreciation of the naira, for instance, it means that the naira is gaining against currently the benchmark currency for most that is mostly used is the US dollar. So you what you would look at if it's appreciating against the US dollar, it means that your currency is improving, and if it's depreciating against the naira, it means your currency is the value of your currency is going down. So most likely, so when you look at the impact for the impact it has on prices of goods and commodities, so I'm looking at it from inflation. There's the import element for inflation. So if our currency continues to depreciate, like we've seen in the last 2 years, it means that the cost of goods would have gone up, because when you import in dollar terms and you convert it to naira, it means the price of those goods would increase, and it will reduce the ability of what you can afford, because it will impact on your purchasing power. Secondly, you also look at it from the investor's angle. So for the investor, when you have an idea of the direction of the exchange rates, you also want to take position. Either you are investing in dollars, and or you are, depending on the type of contract you are going into, whether to lock in. If you think that it will not going to be favorable, you do forward contracts. So coming to the business, so for businesses it's also very important, because there's also what you call the inputs. If it's a manufacturing business, it is important for you to be able to gauge the direction. So if it's we are seeing a depreciation, so now we're in Nigeria, looking at the last 1 or 2 years, we can see how the naira has depreciated, has moved, has depreciated by more than 50% in the last 2 years, and that would have impact on raw materials. It means that if before you used to buy 1 or 2 tons for you to produce, with the exchange rates, with the same naira, you may not be able to buy more than 1 ton of whatever material that you require.
Mm.
So that would reduce the amount you need to produce. And if you are not producing, if before you are able to produce 100 tins of milk, and because of the adjustment in exchange rates, you are producing 50, it means if you are using 10 laborers before, you may now need 5, because, and that would impact on uh, employment, because you will need to downsize.
Mm.
Also looking at it from the economy. So there's when you look for economies, it's also very important that you have a stable currency,
Mm.
because it helps the businesses to plan.
Mm.
For looking at Nigeria economy, we all know that even for the government, when you look at the our debt level, yeah, we're saying about 77 trillion. But we also know that because of the debt element, which is about 39%, the depreciation or devaluation, whatever you want to call it, of the naira would also have its impact. So when you borrow outside the country, it would impact. And we can see from the last budget, this budget that has just been signed, that about 6.6 trillion will be used to service debt,
Service that.
which is almost about 40 to 50% I think it's about 66% of the projected revenue. We also saw the last 2022 performance based as of November, that debt service to actual revenue is almost at 100%. So it means that it is reducing the effectiveness of the budget. So it has its implication. And having your currency depreciate over time always have that impact on the individual, on the business, as well as on the economy. So most economy work towards improving and stabilizing their currency. Currently, what we use in Nigeria is what we call the I would say the excuse me, pardon me now. I would say the flexible exchange rate regime.
Exchange rate.
It's not fully flexible. So um, it's managed. That's the word I'm looking for. A managed float. So it means that we only adjust when there's a need for us to adjust.
Sincerely speaking, you've been able to explain to us the importance of this foreign exchange, the forex we're talking of, on individual, corporate organization, and nation at large, telling us areas where we need to do it. Appreciate, make the currency more appreciable and it will be better. I go further by proceeding with this question, saying, knowing fully well this foreign exchange, which institutions are actually responsible for the foreign exchange market? I'm asking this question because for average Nigerian, we see borrow the change, the BDCs, and some individuals. If you go to Ireland, go to some certain place in all the choices area, you see them hawking foreign exchange on the street. Are they among the legally recognized institutions? So I like the legal ones and confirm if these ones too are legally authorized to do what they're doing.
Okay, thanks. Very interesting question. And the legal entity or the parastatal that has been saddled with responsibility of ensuring stability, which call price stability, exchange rate stability, is the Central Bank of Nigeria, because the reserves also sit with them. So they have the ability to they supply, they are able to supply FX based on need basis. And when there's also a need for them to also get the demand, the government pays, like the proceed of oil goes to the CBN when there's a proceed. And most time when government also raise euro bonds, it also goes to the CBN. So it gives them the ability, and they also capture the import and export of commodities. Because when you import, you call what you call letter of credit from C that you feel they try to capture when you want to export and also when you are importing. So they are the major parastatal that is saddled with the responsibility to be able to manage our currency. And you spoke about the bureau de change. So for them, they are also legal and they are expected to serve the retail segment. But we saw, I think that was about, was it last year or 2 years ago, that the CBN took the responsibility, the supply. So the CBN supplies them dollars, I think twice in a week. But due to a lot of reasons, move the supply to the bank because they believe they can also control the banks in terms of the supply. But in most other climes, the bureau de change are the one in charge of supply to retail. You want to your BTA, your PTA, school fees. Most times, they also have that because when you also check the BDCs, there's also the autonomous sources. So it's not just the CBN that supplies them dollars. There's what we call autonomous sources. So for those that import or those that export rather, and they have dollars, they can sell to them. They will not sell at the official rate. But you also mentioned those on the streets. For them, they are not licensed. They are not licensed. It is not legal to hawk dollars on the street, and that is why you already have the BDCs to supply them. But what is happening and why are we seeing this is because if you look at it currently, the spread that we have between the official exchange rate, which is around 435 naira to a dollar, and the unofficial exchange rate, which is around 755 naira to a dollar, is an incentive for you to have a lot of abnormalities, a lot of unethical practices. Because when you have a spread that is above 300 naira to 350 naira, it may be difficult for even the CBN to control, because everyone would go on $1 million, you earn 300 million spread. So this is enough incentive for those that are unprofessional to deal and also impact on what is going on in terms of supply of the FX.
And that is just a brilliant way. It is unethical to hawk foreign exchange on the street, but because of the juicy package that they enjoy between the official rate and the parallel market, they tend to have it as a major source of income. While we proceed, let me hint our audience that the platform is open for question to our guest as we proceed, doing justice to our topic today. And for those that are just joining us, we're talking about the effect of foreign exchange shortages on businesses. And our guest has been doing justice today. Ayodeji, I want to proceed to ask, are there principles or characteristics that are associated with Forex? Take, for example, we hear about the 80-20 rules in Forex. What does it really mean, or what does it connote?
Okay, thanks. And most times when you hear 80-20, it reminds all of us of the Pareto principle,
Pareto,
the
yeah.
80-20 rule. And this rule is most applicable to Forex traders. So what basically they are saying is that, when you trade Forex, there are currency, what we call currency pairs, where currencies that you are, instead of you trading all the currencies, can you focus and trade 20% of the currencies that you believe will deliver almost 80% of your profit, rather than just everywhere? You can identify those currencies that are very effective in terms of movement. They may be very volatile, but at the end of the day, we give you the expected result. So it's just a trading strategy for those that do day trading. And it's important to know that Forex trading can be very volatile. And I know trading it, you need to understand the risks that is involved, because there are a lot of factors that controls it, especially when you are trading currencies against each other. If there's any major policy that is announced, would impact on the direction. And I know a lot of people have lost their shares. So it's important to understand how it works. It's important to understand the risks involved when you are trading Forex. Trading Forex is different from investing in FX, in dollar denominated assets. That is hedging. So it's important to be able to distinguish the two. And you can't, if you are trying to keep your money in dollars and you're using it for trading, it can disappear overnight if you are not a professional. But if you are edging towards, you are putting it in safe investments, Euro bonds, dollar denominated mutual funds, you are investing in US stocks, then that is investment that you expect it to grow over time.
Over time. That's a deep understanding of the 80-20 rule in Forex. And you've just given it to us that we should have deeper knowledge, giving us another aspect of it, which is edging. I still welcome questions from our audience as I proceed. Ayodeji, as a business analyst and coach, I want to ask this question. What are the major Forex peers? And permit me, our dear Nigerian currency, is it part of them? If yes, how? If no, why is it not part of them?
Okay, thanks. And the earlier question was, we were speaking about the currency pairs. And what, for traders, what they first look at is liquidity. So when you look at the liquidity of our currency, then and you also see the business activities, you would see that we are not ripe to belong to the top currency pairs. So most times you discover that for most of the top currency pairs, you see USD versus pound, the pound. So you when there's like a policy that would get the US stronger, it means the pound is depreciating. So that would affect if you have exposure, if you are buying the pound, and it means it will be depreciating against the dollar. There are also other top currency pairs that we see. You would see the Japanese yen against the dollar, and you always see more volatility when you look at currency across continents, because different factors will really impact on them. So for instance, when you look at the Chinese economy, for instance, if there are factors that maybe they want they want to import, they want to improve their economy and export more, you sometimes see that they may adjust their currency to ensure that their goods are cheaper relative to other economies. And as a result, they will be able to export more, and they give them more dollar earnings and maybe stronger over time than currencies that you are comparing it to. So, but it's mostly this currency pairs most time is for active traders, not for business activities, not for business owners. And like I rightly said, is highly volatile, is highly risky, and most times you need to understand. For those that trade it, they set a stop loss. Most times they look at even some even take margin, and positions are closed when there's a volatility in the economy, in those currencies that you are putting trading against each other.
That's a brilliant way, and you've just made us to understand that we have active traders and those that actually use the foreign exchange for business sake. You keep emphasizing it, and I believe our viewers are listening, that this foreign exchange is very, very volatile. Let me start today with the question from Ajibola Railwan from Lagos. Yeah, and he's asking, please, how can corporate entity manage their foreign exchange exposure in the light of the current difficulty in obtaining foreign exchange at official rate?
Okay, thanks. And this is a very interesting question. I think the first thing that you need to do is you need to reduce a lot of foreign currency contracts as much as possible. So in negotiating your contract, for instance, as people use Microsoft O365, and sometimes it's charged in dollars. Sometimes you see, but sometimes you can also negotiate that it's a fixed amount in naira for that period. So whatever it's happening in terms of the volatility of the FX will not have much impact on the amount you are paying. So most times you should first understand your revenue. If your revenue is in naira, there's no point going for a dollar loan. There's no point having a lot of contracts that is in dollars, except where you don't have options. Some software may be foreign, and you may need to pay in dollars. But you can also negotiate, you can do forward contract and agree a rate. So if you are trying to sign in January, you can, if you know that the dollar will be very volatile, or the naira rather will be volatile, you can agree a rate that I'm not going to pay more than 760 this year for this transaction. And it is important also for business owners that it is good that you use, when you are selling, always use the replacement cost. So if you have imported at 700 and by the time you are selling, it is 750, You don't sell at 700 naira, you sell at 750, because by the time you sell, when you are going to import, it's at the current cost, so you won't be out of pocket. So it's also important for business owners to also track that. Don't say, especially for CFOs, don't say, oh, I got this dollar very cheap at 600, and you are selling it at the rate, maybe based on your spread of 50 naira, you are comfortable to sell at 650. But you need to look at what the current market is saying. It is based on the current market that will also help you. And beyond that, it's also good to see if you can add businesses that will generate FX for you, export. So that you can, if you know that it's critical to your business, then you may also want to have businesses that will generate FX. I think these are some of the avenues that you will be able to reduce that impact. You may not totally be able to wave it off, but it's important to have a bit of strategy, not to be totally open to the volatility of the naira.
That is a very strong, and I want to believe Ajibola has picked that on some of the steps that you can use in managing your foreign exchange. As we get deeper, Ayodeji, I want to ask this technical aspect of the discussion, and that borders around the foreign reserve concept. I want to ask, what is foreign reserve, and why do a country needs foreign reserve?
Okay, thanks. So the foreign reserve is only just, I would say it's like the bank account where your FX is domiciled. So when there are a lot of FX transactions, so which is the foreign reserve is domiciled with the CBN, and it's just like that. Some people call it the backbone or the arsenal that gives you that ability to be able to supply and determine the rate of the naira. So when you look at Nigeria, for instance, you would see that for our foreign reserves, CBN is saddled with that responsibility to ensure that the foreign reserve is buoyant enough, because it provides confidence to um, external investors, because it shows that you would have the ability to be able to pay them when they deal with you. When you go to the market to raise euro bonds, they will also check your external reserves to be sure that you can pay. There's also this rule of the thumb that it's also used, that your external reserves should be able to cover about 6 months of your imports. Currently, as our Q3, our import was around 57, 5.7 trillion rather. So when you look at that, when you convert it to dollars, and you see that how many months. And the reason for that standard, even by the IMF for developing economies, is that if there's a war and you need to import and you're not making FX, you should still be able to survive for 6 months. So you would always see how many months of cover. Import cover is checking your external reserves, dividing it by your imports.
Import.
How does it cover? How many months of it does it cover your imports? So it helps, and the CBN have been saddled with that responsibility. One, to ensure that they preserve the external reserves. Secondly, to also ensure that it is liquid. So they also invest, I think, about 5% of it in in foreign investments, and they also ensure that there's liquidity. So when you would see what we call, when you look at how the CBN presents it, we call the gross reserve. There is the liquid reserves. The gross reserves would capture both the non-liquid and the liquid, and the liquid reserve is those that they can easily turn to money. Thankfully, we're talking to accountants, so we know what liquid assets are. So most times you would see that the CBN would ensure. So in Nigeria, what we found out that what are the major sources of FX that boost our external reserves? The first one is crude oil proceeds. But sadly, in the last 2 years, because of the increase in oil theft, that has almost depleted to almost zero, at least based on like a statement from this CBN that they had not received FX oil proceed for almost a year. And that we can say is responsible for this short supply that we're seeing. Secondly is Eurobonds or from multilateral agencies. So Eurobond has been the major sources in the last 2 years. You see the government have been to the Eurobond market, raised close to about, I think, $8 billion in the Eurobond market in the last 2 years. And others you also find is swap. And when we say swap, you see companies that come in, they bring dollars, but they need naira. So CBN would collect that swap and agree a certain rate. The naira will be given to you, which you can use for your business. Maybe after 2 years, if it's a 2-year deal, after 2 years, you get your dollar back, but you would have also, you return the naira, but you'd have earned revenue on the naira, and you also earn any revenue on the dollars. So we see that a lot of banks have a lot of FX swap that boost their position. And that you would helps them to be able to also boost their profitability. So by and large, when we talk about FX reserves, it's that war chest is like your bank account that the world see to show that you can be able to deal in business. So when people are importing and they need to pay other countries, they see that you have reserves to from your reserve that you can pay. And that is why the CBN would ensure that the reserve does not deplete below a certain level, such that confidence may be impacted.
This is a great insight, and sincerely speaking, it's flowing the way it is, giving deeper understanding to this foreign exchange that we're talking about, and a very beautiful way to explain foreign reserve concept. Let me go back to our viewers and let you know that I've been guesting Mr. Ayodeji Ebo, FCCA, and he's been doing justice to our topic of today, which is the effect of foreign exchange shortages on businesses. I'm sure it's been an insightful time, and you are jotting it down. At least areas as CFOs, as professionals, even non-professionals, things that you need to do during this problematic period of the foreign exchange. I still welcome your question as you proceed. But Mr. Ayodeji, let me pick this with you. We hear about capital flights, medical tourism, jackpot syndrome. In fact, that is happening. Somebody can sleep with you overnight. The next morning, as you are waking up, is eye up there. What are the effects of some of these things on Nigerian businesses and economy vis-a-vis foreign exchange requirement and or shortages?
Okay, thanks. I think that they have their pros and they have their cons. So
Okay.
starting looking at the term jackpot, people leaving the country, going to school. For some economies, they have they have encouraged this, and it's a form of remittances to
Okay.
them. You will see the likes of India, for instance, when you look at the remittances from their diaspora that come in, is enough to create liquidity even for the CBN. And this also takes us back to, because of this spread, CBN is not enjoying that benefit we should be seeing. When you look at the last 2 years, a lot of Nigerians have moved, have relocated. That should impact on our remittances because they all have families here and they send money home. But no one will want to send money at the official rate at 4.55, even if you are paying me 5 naira for whatever I'm giving you. And I would see the black market rate at 7.55. You can see the difference for just sending
It's
$1,000,
wide.
almost 300,000. So it should even be, the relocation should be like a plus to us, because it would boost our foreign earnings because of the remittances home. On the flip side, why businesses are impacted is because a lot of good hands are also leaving. So you would see that a lot of businesses even factor the Japa syndrome into their plans, because you will see some departments, everybody in that department may leave almost at the same time. And
Almost the same time.
it will impact on their processes, it will impact on their business activities. So on that note, on it's really impacting, because you also look at it. I work in the financial service space, in the investment banking space. It's how you learn is based on experience. So if you have all those that are experienced leaving, the new ones coming, there will be nobody to even train them. They may not be as, because the knowledge that has been experienced or that has been captured by those that have left, you may not easily be able to pass it. So it has that negative impact on businesses. But what we know that we need to do, it's the improvement of the economy. We need to improve. Jobs are not increasing, insecurity is there. So you have a lot of people, rather than continue to, they look at the prospects, they try to take that option that maybe there's higher probability that they would be more comfortable if they leave the country. So we need to also always balance and look at it from both sides.
Both sides. That is a very good way to do it. And I have Badmo's question here, who is asking, is it beneficiary to leave the forex to be 100% flexible? And the second aspect of it is, what can be done to close the gap between the official rate and the parallel market?
Okay, thanks, Mr. Shuaib. So the first one, that for Nigeria, we are not ripe to operate a floating exchange rate regime, because we don't earn enough.
Hmm.
So what the CBN is currently using that will just need a bit of improvement is the managed float. And when we say managed float, is when you see a reason that you should adjust, you move it, compared to the fixed. The other extreme is the fixed, that you just fix it at a certain rate. So when you see a reason, you adjust. But what we are seeing when you look at in the past is, because it takes us a long time to make that movement, it suffers for it. So at the end of the day, when action is being taken, the magnitude of movement is always very high, because we don't move it on time to provide confidence. So you see, in the last 2 years, the foreign investors have left Nigeria, and the FPIs, which is the foreign portfolio investors, provide a lot of supply in terms of dollars. But because there was no confidence, and coupled with the global crisis, now Nigeria is suffering from that foreign portfolio inflows that should create that liquidity and confidence, because confidence is key. Secondly, you asked about how to close that gap. To close that gap, now that we have delayed, there needs to be a major adjustment at the official market. CBN will need to take that both steps. So what happens when you see adjustment is that it reduces the pressure. So if the Naira currently is at 430, now as of today is about, I think at the official market, about 435 Naira to $1. And I need to buy $1 million. That means that's 435 million Naira that I require. But if I make that adjustment to 500 Naira or 600 Naira, for instance, it means that my 435 million Naira will only be able to buy about 800 or 600,000 dollars. So the demand will reduce automatically. And once I see that demand will reduce, then I increase supply. So as long as I know that the Naira will be stable, for speculators, they will not go near it. Also, even for investors, you also think twice. If you are not investing for the long term, you may not even bother to invest. So as such, the demand will reduce. So there's a need to, first of all, make an adjustment. Secondly, there's a need to increase supply. So once we begin to see that, then you would see that naira will be stable. If we all recall, in 2017, when this importer and exporters window was set up, for almost a year or 2 years, even the naira was cheaper, even at the parallel market, compared to even the official market. That you see
officially
investors will tell you that even if CBN is delaying, just go and get it for me in the parallel
on the
market.
parallel
So it
market.
is possible. We have seen it before. It's less than 5 years ago, and it's possible to create that confidence.
Hmm. Hmm. That's a very brilliant one, and I want to believe that our viewers have benefited from it. Before I go to my question, let me quickly recognize Fabula's question, who is asking, is there any relationship between forex exclusion list by the CBN and the current forex fluctuation being witnessed?
Okay, thank you very much, Mr. Adeniyi. And I would say there is a very strong correlation between between the exclusion that we're seeing and the depreciation. I'll put it that way: the depreciation that we're seeing in the naira. So, what effectively happens when you exclude items that should ab initio have access to dollars at the CBN segment is that you have just, is what we call it, demand shift. You have just
Hmm.
moved that demand to another market. It means that there will be pressure in that market. So what we are seeing with the drop in supply, with the exclusion, demand has shifted to the unofficial market. Yes, there is no um, full data to capture what proportion of the total activity of the official market relative to the unofficial market. But we all know, when you speak with manufacturers, even blue chips, what they use is blended rates. So
Hmm.
CBN may supply them maybe 15%, and they will need to go and get the remaining 85%, because for manufacturing company, the cost of shutting down is significantly higher than the cost of running, because of the cost of restarting the uh, processor. So they borrow. Apologies. And they go to the black market to purchase dollars. So what we are seeing now is that a lot of companies are now going to the official market. Even those that are schooling now, that most times have access to get dollars before. So everyone, for hospital, tourism, everyone is now patronizing the unofficial market, and that
Hmm.
is leading to the pressure that we have,
We have.
that we currently
Hmm.
have, and the gap.
Hmm. Hmm. That is a great one, and explaining to us the reason why we are faced with some of those things. I want to take this question because Nigerians are warming up to elect a new set of political leaders at the federal level, at the state level, and the local level. Assuming that the major aspirants are on this call among our audience listening and watching us, I want to ask, what's your suggestion to them in reducing the forex shortage and also boosting businesses and ensuring economic recovery in and for Nigeria?
Okay, thank you very much. I think the first quick win, which would call low hanging fruit, would be reducing the oil theft.
Hmm.
We mentioned earlier that the rate, the CBN is not receiving dollars like it used to. And even last year, that oil prices went above $100, we did not benefit from it. So the first thing is to ensure that the leakages is to reduce it. We know it has always been there, but we need to reduce and increase production. Oil production is currently around 1.4 million barrels per day. And in this budget, we have a target of 1.69 million barrels per day to produce. So if we're able to block those leakages, one, it will increase inflow to the CBN, and CBN will have the ability to supply more. Secondly, when you look at the trade data, manufacturing and agric account for 2.3 and I think 3.4% respectively of the total exports. So it means that apart from oil that we export, oil accounts for about 92%. We need to see what are those products that we can add value rather than exporting raw materials. What are those products that we feel we can add value to and make more money and export? We need to also rejig our export policies, because we also hear the complaint that when people are trying to export, it's also very cumbersome that those products end up being damaged before they get to their destination. So if we encourage that, it means we'll be able to earn more dollars. Also for the government, they can also localize use of more local content. If you recall, there was a time that there was a ban of importing using imported cars that it's either cars are assembled in Nigeria.
In
So when you
Nigeria.
look at the budget, that's about 8 trillion has been allocated to non-recurrent expenditure, and you would or non-debt recurrent expenditure rather. If 2 or 3 trillion of this can be spent within the economy, if you in terms of rather than importing these things, then it will also improve and create more jobs. So there's a focus to see those quick wins will be to focus on manufacturing and agri. So once you're able to tackle oil theft, you also tackle insecurity, because when we all talk about inflation, we all know that insecurity is also a major component because most people are not farming again. And once we're able to solve that problem and food productivity improves, prices would go down and there will also be more jobs, there will be stability. Then we can begin to think of exporting, which will generate enough effects.
A brilliant advice, and I want to believe if every one of them is on this call, they've listened to Ayodeji Ebo on some of the strategy that they need to put in to make sure that we reduce the foreign exchange shortages. One thing I keep saying every time I have quality guests, time will not be my friend. But let me quickly chip in the question from Dr. Abel as saying, and I'm sure you can do this in 1 minute before I pick my last question. How best can the migrant remittances be effectively and efficiently harnessed to enhance the nation's foreign situation?
Okay, thanks, Dr. Hassan. If you look at the remittances, diaspora remittances, about based on analysis, about 80% of them are used for consumption. And the other 20% are used for whether investment, those that want to build a house. So what we need to also do is that we need to see how we want to provide confidence and increase that portion from about 80% that is used for consumption to be used for investment. And coming up with the right structure would help attract a lot of diaspora remittances for us to grow the economy. Government, for instance, can come up with a diaspora bond, and it is invested in projects that will be able to repay those bonds. Why they give the guarantee, but those projects should be able to repay the bonds, and people can see the confidence. And as a result, you would see people, rather than people just keeping their money abroad and earning 1 or 2%, they would be able to earn something that is more attractive.
More
They
reasonable.
also know that is secured.
That is a brilliant way, and I can tell you for free, it's been a quality time having Ayodeji Ebo on our program today. But in closing, time is not just our friend, but I want to believe when next we call, you will always answer because you're a friend of the house. In closing, ICAN is always open to ideas that will positively advance the growth of our members, the accounting profession, and Nigerian business environment. Please, what's your advice or suggestion to our members, the institute at large, and the business environment on additional contribution during future discuss on reducing foreign exchange shortages and boosting Nigerian businesses?
Okay, thanks. And quickly, what I would say is that to see how the institute can continue to support the government in providing ideas around improving our manufacturing, we need to improve our exports.
Okay.
And we know, yes, there are interesting policies, and we will not also get tired to continue to say them and emphasize them, but also about implementing. We're expecting to have a new president, and we expect that, as usual, the institute will also see where they can come in helping in crafting and a strategy for execution of how we can grow our manufacturing sector so that we can export more rather than importing always.
That is a very brilliant way to bring it to a close today. It's been a quality and insightful time guesting Ayodeji Ebo FCCA, who have done justice to some of the things we need to know on the effect of foreign exchange shortages on businesses. I want to specially thank you for making our time and sharing your evening with us on ICAN on air this evening, believing that when next we call, you'll definitely honor our invitation. And to all our viewers that are connected from the north to the south, to the east and the west, I've seen them from Abuja, Kano, Benue, the eastern part. They are all there learning and learning. One thing I can assure you is that the editorial board has guaranteed that every Tuesday and Thursdays between the hours of 6 and 7, you are in to uplift your knowledge base so that you can be more relevant even in the dynamic environment that we found ourselves. Let me quickly roll through this announcement that is important for you as member of our great institute to make sure that you pay your subscription as at when due. I'm sure you know there are several benefits even that we roll out on this program every time. If you are financially committed as a member, that is to say, pay your subscription on time. Go to the portal, it's open for you to make your subscription. For the associate member, 17,500, and for the fellow, you have 32,500. And also, let me state that the portal for the fellowship conferment is actually open. So you can log in and do the necessary thing so that you can attain the highest and the peak of the status as a fellow of the Institute of Chartered Accountants of Nigeria. On this note, let me specially appreciate our president, the editorial board, the governing council for providing this platform for our members to learn every now and then. On that note, I will be cutting it a short today till I come your way next week, Tuesday. I remain your host, C.A. Olusesan Okwade, FCA. Till next week, Tuesday, stay glued and stay safe. Have a fantastic weekend. Bye for now.